5, 4, 3, 2, 1, 0.
Ladies and gentlemen, I appreciate very much your generous invitation to be here tonight. You bear heavy responsibilities these days.
Welcome to Stock Legends Radio Show, seeking answers, opinions, and the inside scoop, putting you in the front seat on Wall Street.
In today's market,
this is breaking news. Where is it going next?
StockLegends.com.
Gentlemen, welcome to Stock Legends Radio, episode 16. Please welcome today's host, myself, Quick Draw, also our senior technical analyst, Matt Chart. Welcome to the Stock Legends Radio Show.
Hey there, Quick Draw. Happy to be here.
Every week I think to myself, well, after this week I can honestly say that we've seen it all and heard it all, but we get a new topping every time we think our plate is full. We have a variety of topics that we'd like to discuss today, everything from world economic issues to some conspiracy theories and things that are undertaking in the short-term future. But before we get into some of these more interesting topics, Matt, for a lot of the listeners today, let's take a quick look at the U.S. markets. In particular, you did a technical analysis on an article that you wrote, actually a very well-written article that's already had over a couple thousand views. The article's titled, Why the Dow Jones Will Reach 11,700 Points Sooner Than Expected. And as part of this article, which can be found at stocklegends.com under the Reports tab, you did a technical analysis here, and you called one of the supports around 12,300, and we actually saw that come right down, 12,311 in bounce almost to the T. So congratulations on some phenomenal technical analysis there, by the way.
Yeah, well, the thing we're looking at is called Fibonacci retracements, and we just saw the first Fibonacci retracement level become hit. So the stock market's had a 38.2% pullback from its low of 10,400. So we're looking at this particular move. It was evident that the stock market had topped out around 13,300, and I actually gave some very precise trading instructions for people that wanted to make money off of this, and you could buy a few different ETFs that actually short the market, and if you were able to follow the analysis, you would have been basically taking an entry the day after my article came out because the support level had broken coincidentally just as I'd released the article, and the entry position should have been taken. So the market's had about a 500-point pullback in the last 2 weeks since I wrote my article. Now it's kind of consolidating over the last several days as it's reached its first support level. I'm quite confident we're probably going to see more further pullback in the long term, but we may have a short rally, so certainly it's a little bit late at this point to be getting on the bandwagon. But any move below the 12,300 level, you could take another short position opportunity because I do see further downside risk in the Dow Jones market, and topping out probably a bottom around 11,700. And actually a lot of peers and stuff felt that my article is uncalled for. They didn't believe that we would see a stock market pullback, but it's what's happening. When the stock market's been running up for 6 or 8 months, a lot of people feel very confident it's going to keep going, and that's the time you want to be a little bit hesitant that the market's going to continue, because nothing moves up straight forever. We all know that. There's bull and bear corrections throughout the markets, but we do have quantitative easing that is, all these Fed quantitative policies that are injecting money into the market. There's the plunge protection team that will step in, no doubt. Maybe they're already there giving a little short-term bounce. So these markets are heavily manipulated, but within that, the technicals do come into play, and they do step in at key times to protect major downside risks. So I don't see a complete collapse of the market, particularly with all the money that they're injecting in the markets around the globe, but we do see, a short-term pullback probably over the next 6 to 8 months.
We noticed when you said that you actually touched on the quantitative easing 3, even though despite the Federal Reserve says there is no quantitative easing, we see currency swaps and inflating balance sheets and a lot of things going on, which is the definition of quantitative easing for the listeners today. So we saw the Federal Reserve take a checkbox from the mob mentality survey and basically said, well, quantitative easing the last time didn't work, so let's not go back in there and rename a policy that didn't work before. Let's not call it quantitative easing and let's do it anyways and kind of sweep it under the rug. So that's more or less what Matt was referring to there. Now, when we take a look,
just to reiterate on that particular point, the thing that's going on right now are the currency swaps with the European Central Bank. So the Fed is basically lending out basically free cheap money to the European Central Bank, and that European Central Bank can then again turn around and do whatever they want with it, whether they lend it out to their member nations or purchase U.S. assets in the stock market. Basically, there's money that's being injected in the economy, whether it's directly or indirectly involved in the U.S. market. It's a little bit more difficult to track. It's probably spread out a little bit differently, but it's still a monetary injection, and these are positive in the markets, the European market, the U.S. market, that sort of thing. Do you want to talk about gold and silver briefly as well?
Let's take a look at gold and silver. Now, as you touched on before, we've got a market that's, fairly manipulated, but we see gold kind of settling down here between 1569 and 1550, more or less, and looks like it kind of resting on a support that we saw back in February, March, the beginning of the year. So we might have a bounce there. I mean, what's your technical prediction as far as the physical metals, and why do you think they're kind of being pushed down? You did a good article on some margin hikes in the past, and obviously, the markets are manipulated.
It seems it's a pretty complicated thing to get into. There's many different ways that the markets are being manipulated. It's tough to have a free market in today's age with so many derivatives going on and backdoor deals being done all over the place. But we do see technicals do exist within manipulated markets. Although the overall price is suppressed, we do see short-term support and short-term resistance levels playing into effect. Now, we do have a lot of support here in the price of gold at just above $1,500 an ounce, about $1,520. I think it's a great entry opportunity to take positions and load up on metals, because certainly this is a place you want to be over the next decade in the precious metals market. It's in a long-term bull market, and buying along a key support level, which we've confirmed 3 times over the past 7 months, it's a very excellent entry point in gold, and both silver is basically playing out the exact same patterns. Although it's more volatile, silver has got a lot of support at the $26 level, and we just bounced off $26.73 just a few weeks ago, or about 2 weeks ago. So it's lifting off the support level, so we can confirm that that is indeed an intact support level. Although it's a little bit above it at $28.39, where we closed on Friday, still a great entry point here, and definitely something you want to hold on to. It's basically, we saw that big run up on silver and gold, where silver topped out at just below $50 an ounce. Now what we have is a long-term consolidation. It's been consolidating since April of 2011, so it's been a 1-year long consolidation. The price ran up for almost an entire year. Now we're consolidating for about an entire year. So this is normal trading practices. Stocks have huge runs, they need to consolidate, and we're probably going to see over the next 3-4 months another breakout occurring in the precious metals, and they're probably going to take out their old term highs. So it's a game of patience. You want to take your entry positions along supports and just wait it out and wait for those runs to come in, and we'll definitely see another, I don't know what will spark it, but we're going to see another big move in the precious metals markets in the next few months. It'll probably start to take place, and into the end of 2012, everyone will be rah-rah cheering gold and silver again.
Oh, I agree 100%. Actually, seeing the high of silver, just recently around 48, 48, it's almost 100% swing from its current price. So for the big money investors, there may be a phenomenal opportunity for some profits there. It's safe to say that they're going back up. I mean, especially with the spotlight on paper money right now, and so many people moving massive funds to get away from them. Which brings us into our next topic. China will make the yuan a gold-backed currency. So, and this is kind of just on the wall right now. People are just catching wind of this and kind of thinking of it. Nothing has come out and been publicly said as far as this is concerned yet. What do you think their main plan behind going to this gold-backed currency is, to actually protect the stability of their currency?
Yeah, China is one of the countries I think is doing the right thing in the world right now in terms of trying to stabilize and protect their currency. All these countries realize that the U.S. dollar, being a world reserve currency, is coming up to its final legs, whether it lasts another 5 years, 10 years. It's eroding as a global reserve currency. And in times of crisis, gold and silver will always be money. They've been the precious metals have been used as currencies for over 5,000 years. What makes anyone think that today is going to be any different when we use paper currencies and we debase the currencies at too rapid of a rate, and we don't have strong monetary policies like the United States doesn't right now. They're bailing out every institution, backing derivatives. I mean, it puts a lot of instability in the currency, and China holds a lot of U.S. dollars, so a lot of their wealth is tied up in U.S. dollars. So they're starting to make a move to build up a lot of gold reserves. Now, they won't officially say, yes, we are buying all this gold to back the Chinese yuan, but everyone can see the writing on the wall, what's going on. They want to use this gold for the backing of a currency that will be backed by gold. They want to back the yuan by gold, and they want to be the new world reserve currency, because once they do back that currency with gold, the other countries around the world that are holding these deteriorating paper assets are going to say, well, I could hold something that's depreciating in our central bank reserves on one hand, or I could hold China's yuan and it's going to maintain its value. It's backed by something, whether people want to back it by oil or gold or whatever, it'll be backed by an asset. It'll have tangible value. And that's something that none of the currencies on the planet have today.
What happens when they do, when and if they do go to a gold-backed currency? We've got so many U.S. dollars in circulation. A potential move like this could overnight, have catastrophic effects on the U.S. dollar, because you have to think all this money's floating around, and all of a sudden they're basically getting away from the U.S. dollar and going into the physical metals and these gold-backed currencies. We'll practically have U.S. dollars flying around in abandoned streets, more or less. The hyperinflation will come into effect.
The countries, the BRIC nations right now, people may not have noticed this, but it was about a month ago. The BRICS are major developing nations. It's Brazil, Russia, India, China, and just newly appointed South Africa. These 5 countries have gotten together, and they are planning to institute a new central bank. And they don't want to use the U.S. dollar. They said they're going to back this new currency that these 5 nations want to come together, and they want to back it with gold. So right there is a big slap in the face for the current U.S. or the current reserve currency, the U.S. dollar. I mean, every month or every few weeks, there's a new piece of news that comes out that's just another step in the direction of the U.S. dollar will no longer be the world reserve currency, because the United States is doing everything wrong with their currency right now. They're basically, all the money and all the U.S. interest is going into saving these corporations, and they're devaluing their dollar, so they're putting it at risk. And yeah, you're right. It may not happen overnight. It may happen overnight. No one has a crystal ball, but we could see all these events are coming into place. They're like dominoes. The first few dominoes have been hit, but there's still another 30 or 40 down the road before the U.S. dollar, no longer is the reserve currency. But that process has begun, and the United States isn't doing anything to stop it. They're really powerless to stop it. They can't. The only thing they can do is use their military might to try and force the arms of these countries, or do whatever they can. But I mean, there's so many powerful emerging countries now that don't have to listen to the United States anymore, and they're going to do their own thing. And they want to see a stable currency, and that's going to be gold.
The amount of above ground physical gold, if we've got these giant countries that are collecting gold and backing their currencies with gold, if this were to come into play, which it sounds like, as the headlines start to fill up with more and more titles that seem to point in that direction, that the value of gold would basically go on a tear. I mean, it's really been trying to for a long period of time, but for the fact of trying to balance the U.S. dollar and got some Fort Knox stuff mixed in there. It's tough to even really put a value to what amount of gold is in reserves. And even China has an unaudited reserve. So, I mean, there's no way to really even know how much is there. It's kind of like the shadow investment. You never really know what's going on. But, it says that they're holding an unaudited gold amount of over 8,000 tons, 8,133 tons to be exact. backed. So, I mean, who knows? We'll have to kind of watch the headlines and see where this leads. A lot of people are on the edge of their seats.
Let's just remind our listeners that if you do want to enter the gold market, we strongly recommend that you purchase physical precious metals. There's a huge disconnect with derivatives and the COMEX not being able to account for the amount of gold that is backed by all the paper currencies. There's a huge disconnect between the amount of physical precious metals and the amount of paper trading contracts that exist out there, that there isn't a fair backing. So yeah, if you want to trade and make some profits, sure, use ETFs, use exchange traded funds to buy and sell gold, use Forex or whatever you want to use. But if you guys want a serious investment you want to hold on to, go buy the hardcore physical precious metal, because just as the US dollar probably isn't going to be around the next 5 to 10 years, neither will the paper contracts that are backing the precious metals. I mean, those are going to go out the window just like the US dollar is going to go out the window one day too. So be prepared. Make sure you load up on those physical metals. I like silver. That's my choice. But whatever you want to do, diversify and take some positions and just hold it. Put it somewhere safe.
And also, just to add to that note, we heard of a lot of people that were trying to take large physical deliveries of gold and silver, and even though they have storages, whether it's with the Swiss or wherever, they try to take physical delivery and they wouldn't be able to deliver it. Some people are taking 4 or 5 months to even take their own physical delivery, which goes to show you that a lot of the holdings are still just computer description of what your physical asset is, and it's not actually there more times than not, whether you think it is or not. So
That's
let's
true.
take a look at the most recent headlines, and this has been coming across left and right, and everyone's got their own opinion on it. The Facebook IPO. What happened, Facebook? Unbelievable. We saw you open up well over $38 here and crashed all the way down below $30. I mean, that's unbelievable.
Yeah, I think the low was
loss.
30.94 was the low, so just want to correct you on that. But very close to below 30. It's probably going to go down below it next week because, as we can see, Facebook was able to raise $18 billion from their IPO, just selling shares into the market. So, it was just a big pump and dump, right?
Yeah, it looks like it to me. I mean, we're typically on the other side of the market. We do a lot of alerts and things of that nature around the OTC, and it looks like an average stock chart, something that we would see in the darker corners of the market. But, there were also some things that were very questionable on the fact of Facebook's etiquette entering the public market. There were some things that weren't made public that were supposedly supposed to be made public as far as their auditing and some other situations.
Yeah, they didn't disclose. They were not being completely honest with the public. Now we're going to see some congressional investigations into the Facebook IPO process. I believe was, introduced none other than our good friends Goldman Sachs. But, they basically disclosed the fact that Facebook has got declining earnings and a few other things they swept under the rug. They kept quiet from the public, and, the mainstream media just hyped and pumped Facebook, and everyone, including their grandma, was buying Facebook shares to grab a piece of, the next big investment. Well, Facebook was worth $81 billion yes, $81 billion market cap is what was sitting at Facebook. So look at what's happened to LinkedIn and MySpace. I mean, all these companies have taken huge declining rates from their peaks. And Facebook can't honestly be worth $81 billion. I mean, that's an insane amount of money. So it's going to have to reevaluate itself to probably something a little bit where it's going to be more equitably traded. Now, it was a big pump, and now we're seeing the crash come in, so we're going to see a lot of fear in the market. So there'll be a great time to buy a Facebook share. Maybe 6 months from now, it'll be trading around $13 or $10 a share, where it's probably a little bit more reasonably valued, and we'll see it bounce. But it's really unfortunate for the everyday person because they just got suckered into a big con game, and they got, there's the banks again robbing from the public, just doing whatever they can to rip off the public the best they can.
It's such a difficult segment of the market to actually put a value to beyond the typical indicators, fundamentals and things of that nature, because what you're buying more than not is the information. The vast amount of information, because Facebook, more or less, when I picture it, I just picture a supercomputer that's collecting data on almost the world as a whole. So while it's collecting data, hey, this person here likes dogs, this person here likes jogging, this person here likes to play tennis, all that data is collected, and whether you know it or not, it's resold and put into the market, and that builds on the value. So you're not just given a value based on the data and what it's worth today, but if you play tennis today, you're going to play tennis in 10 years. So that's valuable to, we're in the information age, for any kind of marketing or anything of that nature, and, just the all-around exposure, especially since the age range for Facebook, although more popular along the youngers, pretty diverse. I mean, I don't know many people that don't have a Facebook page, and especially right now it's spreading into a lot more of the underdeveloped countries as fiber optic cables and the infrastructure start to get built up for the first time. I mean, imagine for some of these undeveloped countries. I mean, this is amazing to them. They're not used to this kind of stuff. So, I mean, we saw what social media can actually do. We saw examples of it in Egypt with Twitter and so on and so forth. It's basically interconnecting the world to a vast amount of knowledge that previously was just not available.
Yeah, well, I can happily say that I don't have a Facebook account. I had one for about a month or two when it first started getting popular, and I got rid of it. And, I had all my friends saying, what's wrong with you? Why don't you want to get on Facebook? I mean, get on Facebook. Everyone's on Facebook. And it was just something I didn't want to participate in because, I like the aspect of having some privacy in my life. But now I actually tell people, yeah, I don't have a Facebook account. And it's weird. Their attitudes have actually changed. It used to be, well, what's wrong with you? Why aren't you on Facebook? Get on Facebook. And now people's reactions are really good for you. That's awesome. Like they're happy that I don't have Facebook or I managed to stay away from Facebook. It's a weird change in attitudes I've noticed from people. And I don't know if maybe that has some sort of connotation to the future of Facebook of what might be happening to it. But I thought it was an interesting perspective or an interesting observation that I made when talking to people about Facebook.
Yeah, it's a great way to keep in touch with people, but it really does put a magnifying glass into your life, and a lot of aspects of your life become public, whether you like it or not. Now, there's been a lot of focus on Europe and Greece and what's going on in that segment of the world. It's been on the headlines. There's a lot of different things going on. People are predicting when Greece is going to be forced to go back to the drachma and exactly what's going to happen as far as that's concerned. No one really knows exactly what the timeline is or exactly whether or not Greece is going to pull out of the euro. It seems like, there's not much of a choice at this point in time. Now, what this will effectively do is it's going to cause a lot of stress. It's going to cause a lot of stress in the large banking systems on a global level. What's your input on Greece and what do you think is going on as far as that's concerned, Matt?
Well, I just want to say, first of all, I think since we started our radio show about a year ago, we've been saying that the Eurozone is not going to survive as it is. The way it's been structured, the way it's intrinsically been built, it just cannot survive. And so we would talk to people about it, and everyone would say, oh, Greece is going to be fine, they're going to get their bailout. And it was us that said, Greece will be back around for another one. And it was only a few months, 6 months, a year later that Greece took a second bailout. And were we surprised? No. And are we surprised now? No, because this is what the way that it's structured is just not going to survive. You can't have all these countries based on a central bank. They're all diverse countries. You've got inequalities, unfair trade balances going on, and something like that is just doomed to failure. Not only that, but it's the entire structure of the banking system where they can just continuously print and bail out. They won't allow any country to take, they won't allow those inequalities to balance themselves out by letting Greece file bankruptcy. They just want to continue pumping them up with more debt. And it's really a sad situation because look at the political unrest in Greece. And although Iceland was not a member of the Eurozone, they were one of the only country on the planet that said we can't afford to bail out our banks, and therefore we're not going to do it. They put measures into place to protect the assets of the citizens and basically said all these derivatives, all these bad bets that these banks made, you're going to have to suffer your losses and you're going to go under, and we're going to start new banks. And Iceland is one of the fastest growing economies in Europe right now. You wouldn't have expected it at the time. Everyone thought Iceland was crazy for doing what they're doing, and everyone should be following, the bailout route because that's what the rest of the world was doing. But, if I had to take my choices of countries to live in the next 5 years, I might be packing up my bags and moving to Iceland.
Oh, I'd have to agree. People are saying that, once this happens, it's evidently going to be a financial collapse, a recession, probably a depression. And we've seen a lot of the larger world banks that actually projected that Greece was going to fail before this even came to the headlines, and they never even changed the books off of the drachma originally, which is amazing.
And there was an interesting article published by Reuters, that when the first Greek bailout had passed, that a lot of the banks in Greece started implementing ways to go back to the drachma to flip a switch on. Actually, some of the banking institutions still have that structure in place. So when the first Greek bailout passed, these banks started preparing for the end of them being a member nation in the euro and using the euro. So, it's like the banks themselves are like, oh, we're getting a bailout, let's prepare for the inevitable, while the public is being told that, everything's going to be fine. The banks seem to know what the future is going to hold. They're just not saying it publicly. So again, the public's left in the dark of what's really going on, and, the insider banks know the future of what's going to be happening, and that's going to be that Greece is going to leave the euro, and we're going to see a lot of political instability with that country. Hopefully, it'll be better for Greece in the long run. File bankruptcy, Greece, take your losses and move forward, and stop letting the IMF put dictator politicians into your parliament and running your country into the absolute ground. It's pathetic.
I'd have to second that. Banks prepare for the return of the drachma. This an interesting article here that basically says that some banks never erased the drachma from their systems after Greece adopted the euro more than a decade ago. So more or less, they took a look at the strategies that went into place. They took a look at the instabilities, almost right away, and they held their wages that Greece would be going back to the drachma rather than, changing their systems and becoming a product of a failing mission, basically, more or less. Planning behind the scenes has been underway since Europe's debt crisis erupted in Greece in 2009. U.S.-based Hartmut Grossman of the ICS Risk Advisors, who works with the Wall Street Bank, says a lot of firms, particularly in Europe and also here, have been looking for that day for a very long time. And it doesn't seem like it's going to be too far ahead. So it goes to show you, again, what you just touched on. The public is told everything's going to be fine. Once we do this bailout here, we won't have to worry about Greece anymore. Go back to your investments, because what the world banks don't want, and, what the big house economy of the world doesn't want, basically, is for people to get nervous and spooked and stop investing, because once that currency stops flowing through the markets, it's hard to leverage the populations, because when they're leveraging these situations, believe it or not, they're leveraging my money, they're leveraging your money, they're leveraging the world cash flow to be able to do the dance and be able to counteract.
Yep. And once you start the bailout process, it just keeps growing bigger and bigger. And the more bailouts you do, the harder it is to suffer the losses at the end, because you're just inflating that bubble bigger and bigger and taking on more debt and more assets. And look at what's happened on JP Morgan that we've seen in the news over the last 2 weeks. Jamie Dimon, the CEO of JP Morgan, says we screwed up because they lost $2 billion in their derivatives trades. Well, keep in mind, folks, that JP Morgan was one of the beneficiaries of the TARP and bailout funds and quantitative easing programs. They've gotten billions and hundreds of billions of dollars. And sure, maybe $2 billion isn't a big mark on the chalkboard, but what it shows is how these people get bailed out and they just take on more risk. So there's no lesson to be taught to someone that, makes a mistake. They have to pay for it in order for them to learn from it. The bailouts just continuously build up the bad bets. It basically reinforces the bad bets. It's like, yeah, you gambled and lost. Here's another $1 billion. Go bet it again. Go bet it again. And they just keep losing because these people don't understand the risk that they're taking. And this $2 billion loss that we were told happened 2 weeks ago, May 12th, I believe, was the date that this came out. It's May 28th now. And now we're seeing that, these losses are actually going to be, $5 billion. Well, what's going on? Why are we not told the truth? They won't even tell us what these losses are. There apparently, some investigators have done, is that they said it's from the derivatives market and the credit default swap. Well, these people take these make these derivatives bets to protect from losses, but they themselves are incurring losses with these bets. So, what's the purpose of having these in the real world? I don't know.
Exactly, and where's the accountability? It's funny to see, these large bailouts being taken. There's committees that are set to investigate J.P. Morgan's trading loss. You guys are going to like this one here. The person that is in charge of the investigation into J.P. Morgan's trading loss is former J.P. Morgan lobbyist Dwight Fettig. I mean, how deep does it get? You're being investigated for something, and the person that's investigating you is your former lobbyist.
Yeah, they might as well just be investigating themselves. I mean,
exactly.
Who's to say that this guy isn't still on the payroll of J.P. Morgan? He's ex on the payroll. I mean, him and Jamie Dimon, I guarantee you probably went out for lunch dozens of times. I mean, how does something like this even happen? It's mind-blowing to see something like this. I don't expect anything to come of the investigation. I mean, just the person who they've put in charge to investigate them. I mean, you already know that this investigation is a total sham. The public is like, oh, well, we're going to see what's really happening at JP Morgan. Well, you're not. Sorry, guys. You're not going to see anything. It's just going to get swept under the rug, and JP Morgan will maybe get a little slap on the wrist so Dwight Fettig doesn't look like a total tool, although he probably is. And, everyone will go about their day, and they'll continue making losses, and the taxpayers are going to bail them out. I don't know if you guys, I mentioned this on the radio show several months ago. JP Morgan had put up, I'm trying to remember off the top of my head, I believe it was $90 trillion in derivatives are now backed by the Fed. So, these losses are probably being bailed out right now by the U.S. taxpayers. So, hey, guys, you guys are paying for Jamie Dimon's mistakes, and nothing's going to happen, and he's going to keep on losing your money, and just keep putting money in the stock market. Everything's going to be okay.
And to ensure that your money's managed and keeping an eye on without any negative wrongdoing, they've put his former lobbyist in charge of it just to make sure that the justice is served. So congratulations there. We'll be watching that to watch that unfold and watch even more of our Stock Legends predictions come to the table as the ball of yarn entangles even further and more than it was previously. The $2 billion loss of JP Morgan is just a preview of the coming collapse of the derivatives market. Now that number is even bigger. How exactly does this bad bet put pressure against the derivatives market? And is there any kind of accountability that's going to be pushed through to, additional leveraging of the derivatives?
Well, one of the things that people need to understand about the derivatives market is it's very, very thinly traded. This article goes on to say it's basically five guys sitting around in a room, deciding who's going to buy and sell these derivatives. It's not like you're entering a order on the NASDAQ where there's 7,000 traders participating in the security you're trading. I mean, it's nothing like that at all. This is basically very thinly traded, and JP Morgan basically is attributing these losses to the fact that it's thinly traded. And when you go and put a sell order through in a thinly traded market, you can go and take losses on the first part of your order being executed, and then it just drives the price down further, and you're able to sell another part of your order, and it drives the price down further, and you're able to sell another part of your order. So it can be difficult to exit from a thinly traded market. Now, where this can come into causing pressure on the overall derivatives market is it could start to send panic shocks, and other financial institutions might be saying, well, you know, JP Morgan's losing some money here. Maybe we should start cutting back on some of our derivatives trades. And maybe it's at that point where the greed bubble just got a little too big, and now some people are second guessing their positions and might try to take some profits off the table or cut some losses, and that could have a negative spiral effect on the rest of the derivative market. I mean, we know that the derivative market is the primary cause of the 2008 market collapse. Well, if anyone's been paying attention to the derivative market, it is bigger today than it was in 2007 and 2008. The derivatives market is growing at an exponential rate. So this is a concern for people that they should have when all these derivatives that cause all these problems are ballooning bigger and bigger. I mean, it's another catastrophe waiting to happen. So whether this is the straw that broke the camel's back or not, I don't know. Some people are speculating it is. It's too difficult to say, and a lot of these derivatives transactions are, you know, not very public, so it's difficult to really know what people are buying and what people are selling, and what is actually, you know, what the value of these derivatives really are. So.
Yep. Warren Buffett put an interesting quote in reflection of the derivatives market. He said the first reason is that the gambling instruments the banks now use are mind-bogglingly complicated. Then he also said the second reason is that Wall Street's incentive structure is fundamentally flawed. Bankers get all the upside for winning bets, and someone else, the governments, people, or shareholders, cover all the downside risk. So what he's basically saying is that, you know, imagine having the ability to walk into a casino and spend all the money you want, and as soon as you're broke, go outside and reach into 10 or 20 people's pockets and go in and spend what they have. Why would you stop?
That's a perfect analogy.
We're having a great time. We've got drinks, you know, we've got cocktail waitresses coming around, you know, the bells are going, the chips are flowing. You know, we're having a great time. Unfortunately, when the party stops is going to be when the people outside don't have any more money, and then the lights go out in the casino. And now what happens? Yeah. So it just brings us to our too big to fail banks, and actually how much they've grown due to recent reports. JP Morgan Chase, 70 trillion, Citibank, 50 trillion, Bank of America, 50 trillion, Goldman Sachs, 40 trillion. These same exact banks that we saw just recently, we're talking 4 or 5 years ago, only controlled, what was it? I think it was 12% of the
43%.
Wealth.
Basically, the numbers that had come out were that 5 years ago they held 43% of the global economy, and now they've ballooned to 56% of the U.S. economy. I mean, you have 5 banks. Think about it, put it into perspective, people. 5 banks are the same size as over half of the entire U.S. economy.
In 1970, these same 5 banks, now the ones here in question are Citigroup, Morgan Stanley, Bank of America, Goldman Sachs, JP Morgan Chase. In 1970, these 5 banks held 17% of the U.S. banking industry's assets. Now, today, the same 5 banks hold 52% of the U.S. banking industry assets. So, I mean, this is hard to believe. You know, we're giving them bailouts. You know, Bernanke goes ahead and says that, you know, these banks are too big to fail, and goes on this big public kick. You know, it's hard to understand if somebody's really shooting from the hip nowadays or if they're campaigning. But then we go and turn around and give them a huge bailout that's almost jokingly unregulated, and the money's blown through in the blink of an eye. And you know, now those same exact banks hold 52% of the assets. So what we're seeing because of this, more or less, seems like an interconnecting going on between the banks, the large banks, and the governments. I mean, they almost act as if they're one entity nowadays. Not to mention, you know, the alarmingly low amount of taxes. So they don't assume risk. They don't really pay taxes. These huge companies have these loopholes where they're able to get out of paying massive amounts of taxes. For example, Pacific Gas and Electric between 2008 and 2011 made a total profit of $6 billion, yet only paid an effective tax rate of less than or around 8%. Even more alarming, Verizon made $19.8 billion and yet paid an effective tax rate of 3.8%. I don't know about you or I, but I'm basically scraping off pages. I'm working through my taxes for hours and hours on end and still pay well over 30%. But they've got these huge loopholes that they're able to take advantage of and capitalize on these massive amounts of profits. I mean, massive. They actually have so much profits that they're able to put aside that they hire full-time staff, which basically are tax people that work year-round to find out how they can find even more loopholes for the following year. The other billions of dollars that they're keeping, they're putting right back into finding out how to save even more money based on more large corporate loopholes.
Yeah.
So,
these guys come in and they hire all these lobbyists that write the tax codes, and they basically create, they don't just find loopholes in terms of saving tax money, they actually create loopholes in terms of saving tax money. And it's a big atrocity when the country is in the shape that it's in, and these countries can make billions and billions of dollars and pay virtually no tax, and the average person is struggling on the street, and they don't have enough money to put a house over their head, and they're still having to pay 30% of their money in taxes. It's very sad.
It's horrible. Yeah, it's horrible to watch. When the derivatives market fully implodes, will there be enough money in the world to bail out everyone? And this brings up a great question, because we've seen how these large corporations and banks handle their funds, when they're given to them. And first time around, the U.S. Citizens as a whole, it was kind of a new concept, and a lot of people now are catching on. So we don't want to back them up. I mean, why should we take all this tax money, especially in the position that we're in, and basically throw it out the window again, because that's all it did before. We're seeing it all over the place in Greece and everywhere else. Listen, boosting them with more money does nothing but buy you a little bit of time for an even larger collapse, and we're seeing it again here with the banks as the noose tightens a little bit, as a spastic last-ditch effort to try and bring some form of stability. They take a couple billion, a few billion, $5-10 billion and throw it on 27 red, spin the wheel, and you lose. Okay, well then there goes that. Only got a couple more bets until it's time to leave the casino, and don't come asking me for money. I don't know about you guys, but I don't want to participate in it. And talking about how the big banks and large corporations and world leaders basically group up and create a flawless system for themselves. We're the ones doing the heavy lifting. Let's talk about Occupy Bilderberg. For those of you that don't know, they're planning on coming to the United States, to the U.S., North Carolina next week, and this is picking up some steam here as people start to catch wind of it. For those of you that don't know, the Bilderberg Group is a large group of world leaders.
It's the power broker elite, basically.
Yep, world leaders, social media channels, news channels, politicians. We've got people there from Bill Clinton, been there. I mean, you name it. And what they do is they meet and they, behind closed doors, talk with foreign governments, banks, news channels, and their topics and things that are discussed are under speculation, to say the least, not to mention that they're breaking the Logan Act. And the Logan Act was put into place hundreds and hundreds of years ago in 1799 that criminalizes unauthorized U.S. citizens from negotiating with foreign governments. Yet we've seen everybody from the Bushes participate. We've seen, it even goes higher than that. Henry Kissinger, who's wanted for international war crimes, rape, and mass genocide in Angola, East Timor, Iran, Greece, Philippines, Argentina, Cambodia, South Africa, Laos, Vietnam, Chile, but was never brought brought to justice. Imagine that, a member of the Bilderbergs not being brought to justice. Some other members that you might see here are, we've got Henry Kissinger, we've got Richard Pearl from the American Enterprise Institute for Public Policy Research, we've got Kevin Warsh from the Federal Reserve Board, we've got the executive chairman of Google, Eric Schmidt, as a part of the Bilderbergs. We've got the vice chairman of Citigroup. We've got
Rockefellers go down.
The Rockefellers.
It's the power elite that come and meet behind closed doors every year, and they plan out global politics the best that they can. And it was in 2006 or 2007, the meeting minutes are released through some of the members, will release them to some members of the media, and the word had come out that they were going to implode the housing bubble, and sure enough, it happened just as they had planned it would. And so, I mean, it's difficult to say that this is just, these guys are just meeting and having lunch and chatting about, the latest hockey game. Well, no, you and I talk about the latest hockey game and the latest football game. These guys plan on how they're going to steal all of your wealth. So it's very important you pay attention to what's going on in Bilderberg. And it was interesting in 2011, which was last year's Bilderberg meeting. I believe it was in Sweden. There was a Swiss politician had called for the arrest of Henry Kissinger, and it was very interesting to see that this politician actually come down to the hotel doors to attempt to arrest Henry Kissinger, and one of the security guards had assaulted him, and it made national news. And of course, these people like to operate in secrecy. They don't like it when the spotlight shone on them, and of course it brought a lot of attention, and they actually had to shut their meeting down early. Now, with all the Occupy Wall Street and protests going around the world that we've seen over the last year, it's going to be a very interesting 2012 Bilderberg event in Chantilly, Virginia. I expect we're going to see record number of people out there flying from all over the world. They're going to come and show that the Bilderberg Group cannot remain a secret, and if we can get some mainstream media coverage, because virtually every year there is a media blackout, despite the fact that the CEOs of the New York Times and the major financial publications and major newspapers around the globe actually go and meet at these meetings, they do not mention a word of it in any of their publications. So there's a virtual blackout of the Bilderberg Group, and it's the jobs of the alternative media, shows like this one and other shows, to bring attention to what is going on at these Bilderberg meetings, and that they do affect you, and whether you want to believe it or not, do some investigation into the Bilderberg Group for yourself, and you'll see just what kind of an event this is.
Exactly. We've seen all kinds of events come to the table here that actually went through to fruition. In spring 2002, when war hawks in the Bush administration were pushing for a summer invasion of Iraq, the Bilderbergs expressed a desire to delay the attack until late March the following year, which is when it happened. When we go back to the bubble, same thing with the bubble. The housing market was allowed to soar, and they said that they were going to pop the bubble, which they did.
Yeah.
We've seen them flex their muscles multiple times.
It also came out that they were going to run oil prices up to $150 a barrel, I believe, in the 2008 meeting, and it was just a number of months after that we saw oil run up to $150 a barrel. I mean, these guys, I can't say everything that they've wanted to happen happens, but these guys do the very best of their ability to try and put the noose on the American people and the people of the world. Basically, they think that if you don't have the ability or don't care enough to pay attention to what they're doing, then they will take control of you. And it was a famous, Plato had said that if you do not participate in politics, then you will be ruled by your inferiors. So that's a perfect quote that I just wanted to mention to everyone, to pay attention to what's going on in politics around you. I'm not just talking about the Republicans and Democrats and the latest, sideshow antics that are going on there, because a lot of that stuff is a big distraction. But if you guys can pay attention to the real people that are controlling the world and the real power brokers of the planet, see what they're doing, and you'll have a better understanding of what's going on the planet.
And it'll be interesting to see how many people actually go there and show up. There's been a lot of big supporters of this, and they're telling everyone, go there, show up. Let's go ahead and mob these guys, and let's make it so public so that they're uncomfortable ever coming back. You
Yep.
know, I mean, we don't want to be controlled by puppet masters, you know, while we're dangling on the end of a string. And, you know, it's frustrating to see, you know, government officials and members of the Federal Reserve actually go on our own land and break, you know, laws that have been put into place since the late 1700s. I mean, these are criminal charges. Unauthorized U.S. citizens negotiating with foreign governments. And this is a serious, not only a threat, but also a charge. You know, if we elect people to represent us, which, you know, people forget nowadays, but that's what these government officials are there for. They're not supposed to be looking out for their own interests. They're supposed to be looking out for ours. And they're going and meeting with other international members of government, you know, behind our back, and it's not public knowledge. You know, that's illegal. And they should be held accountable for that. So it's very difficult to watch, and you know, hopefully, you know, we'll find out next week. I'm very curious to see how it all plays out. But you know, as this kind of catches wind, and the people of America as a whole become more educated and start to take notice of these things that are going on, and you know, with different programs such as our own and other programs, you know, they'll get the idea of what's really going on. You're not going to hear this on CBS. You're not going to hear this on NBC. You want to know why? Because the CEOs and vice presidents, you know, I'm not saying they are members of the Bilderbergs, but I'm just saying, you know, those are the kinds of people that are involved with this elite group. So if you're going to expect anybody to push it under the rug, it's going to be the largest channels of mainstream media. Fortunately enough for us, the general population seems to be leaving the mainstream media as they start to realize that more or less 90% of the information is not the best and most rawest form of information that you can get.
Yeah, we're seeing all the
important
newspapers are filing bankruptcy. I mean, it's the end of the mainstream media as you know it, and people that listen to alternative media like this have an idea that that's a fact. And you know, you can see that the numbers of all the, I believe it was CNN, their viewership had dropped 40 or 50% from last year. So these guys are seeing huge declines in their audiences. You know, they won't publicly come out and admit it, but if you go and look for the information, it's there. You can find it. And people are now moving to the internet, and there's bills that are being put into Congress that are trying to block the internet or have internet kill switches. So, you know, this is something else people need to pay attention to, that this sort of activity is going on. If you want a free internet and you want this information to keep coming to you, then you need to be aware that there are measures in place to prevent you from being able to access information like this in the future.
Ladies and gentlemen, it's been an interesting couple of weeks. We are going to keep our eyes on the headlines and also dig in deep to some of these technical indicators and world indicators so that we can put the information in front of you and try and protect your assets when the time matters the most. So we thank you for listening to episode 16. Make sure you do not miss next week's episode, which will be released Monday at 10 a.m.
The whispers are true. Games that are legendary. StockLegends.com.
All information posted by Stock Legends for informational purposes only and should not be construed as an offer or solicitation to offer or buy or sell securities. By listening to this radio show or this poster or this video by Stock Legends, you are accepting sole responsibility for your own investment decisions. By reading messages, doing so in videos, or listening to the radio show, you acknowledge that the information hereunto contained within this message or video provided or radio show is for general opinionated discussion and for informational purposes only, therefore should not be considered to be complete, precise, accurate, or current investment advice. Be aware that internet persons, videos, and so on, not only on the original message board where this disclaimer was discovered or in this video show, but other message boards that is not limited to the originated video of the website, may be increasing or decreasing our share positions in security regardless of what they are saying or posting or construing on this radio show. It may be compensated in some way or form by a third-party investor in the company mentioned posted in this video or radio show. The non-affiliated third parties compensated may or may not have shares to liquidate, which could affect the stock price. Assume that any security mentioned is owned by Stock Legends and may be buying or selling, adding or subtracting away from the position that they have, regardless of anything said, inferred, construed, or referred to. Believe before or after starting company profile. Always do your own due diligence prior to making investment decisions. Never borrow money and buy penny stocks. Always remember penny stocks are very risky. You could possibly lose your wife, keys, house, and everything else comes along with it. Also, be aware that information provided concerning certain securities contains forward-looking statements that involve risks and uncertainties. As in any investment, never invest in a penny stock unless you can afford to lose your full or entire investment. We completely abide by the Fifth Amendment for this full entire show.